Hey guys, Akil Stokes here. In this past weekend's video, we talked about the importance of having and actually following a consistent process in your trading if you want consistent results. Imagine that. We also dug into the idea of how no single thing works in the market. Instead, as traders, we want to act like detectives, gathering as much evidence as possible so that we can build the strongest case before making a trading decision. Now, funny enough, I actually thought I shared this video with you last week, and after seeing comments of people looking for the video and not being able to find it, I realized I did not. So today I am going to show you that video, and what we're going to look at is a walkthrough of the CTS system, or better known as the Combined Technical Scoring System, which is a strategy that my mentors taught me that helped me in two major ways. One, it forced me to analyze the markets in the same way each and every time I looked at a chart. So I wasn't valuing one thing one day, then valuing something else the next day. It was completely consistent. Two, it also gave me a consistent way to quantify my trading opportunities. And this ties right back into the conversation we had in the weekend video about grade A trades versus grade B trades and the different ways we can handle them. So I hope you enjoyed the video. The footage does come from one of my live trading rooms, but I want your involvement as well. So after you learn about the CTS system and the things that we put into it, I want you to comment below, and I'll leave the question pinned to the top. What would you add, or what do you think you would add if you were building your own CTS system? I think it's a cool way to get some groupthink and some brainstorming going on for those who are in that process of maybe developing a system or strategy and are looking to add some consistent high value things to pay attention to. So do your part, comment below. I want to start off with another pattern trading opportunity. If you guys remember, this was our advanced pattern formation here on the pound dollar. We spoke about it in the weekend video. We've been looking at it all week in the live room. This should be familiar to you if you've been attending. It is an advanced pattern, and then prior to the advanced pattern, we had the flag pattern, and the idea was to trade the flag pattern up to the advanced pattern and then trade it back down. Another opportunity has entered the equation, and this is one for traders who do not trade advanced pattern formations. And this is going to be an example of a simple trade, but also a good example of how you can use the CTS trading system, right, along with this simple trade. So the simple trade is this. We have a double top, right? Can you guys see that? It's a small, minute one, but it is a double top. Price action rallies up, and then we put in the briefest of retracements, and then we go back up to retest the highest close, but not close above the highest high. Just give me a yes if you guys can see that. If you're not familiar with double tops, pretty much they look like this, look like a big V. Boom. Now, I told you time and time again, double tops by themselves are fun. They're cool little simple time frames. Would that be a double top on this time frame? Yes. They are cool by themselves, but I do not think it is a great idea to trade every single double top or double bottom in its own right. I think you're going to run into a lot of troubles. I learned a very expensive lesson doing this. However, as we spoke about before, as chartists, as technical analysts, our job is to analyze the market. Our job is to look for different clues and then put those clues together and find the ideal opportunities. And one of the biggest clues is going to be the where in comparison to the what. Same situation as that flag pattern, right? Where we said that a flag pattern in its own right, yeah, bullish flag, technically it's in the name, should be a bullish sign. But what made this flag pattern stand out is not only did we have the bullish flag, but we had the bullish flag that came with bullish confirmation because of the break and close above structure. Well, we have something very similar with this double top, right? Who can tell me where this double top is located at, right? If you're imagining we're doing our full, we kind of skipped through it, but if you imagine that we were doing our full IPDE process, identify, predict, decide, execute, we would identify what before even looking at the double top? if we're thinking location-wise, where is this double top? If you're trading VS1s, no, not trend, yes, structure, right? If we take a look at our previous level of structure right here, look left, structure leaves clues, the X leg, right, of our advanced pattern formation, right? Again, if we're looking for this advanced pattern formation, this was our X leg, so we know that this starting point is going to be a level of structure. We have a double top right at a previous level of structure. So what does that tell us? Well, that gives the double top a little bit more power because it's not just randomly floating in the middle of space, right? Venturing off forever like Sandra Bullock. It is at a level that we are predicting may hold. Now, if you want to take things to the next level, this is where that CTS system comes into play. And I know that many of you guys are new. You may not be familiar with the CTS system, but CTS stands for Combined Technical Score. It was going under the theme of I just put out the podcast talking about ways to get better with discretionary trading or talking about discretionary trading versus mechanical trading and how we kind of operate here at tier 1 within that hybrid kind of subcategory where if you think of mechanical trading is strictly binary, like black, white, 1, 0, yes, no, like moving average crossed, moving average didn't cross, RSI overbought, RSI not overbought, like there's no discussion. That would be mechanical trading or systems trading. Discretionary trading is more like, I'm picturing like a dancer, like in interpretive dance, right? Where you're dancing and you can interpret the markets and you have this ability to kind of be free, which I don't think is necessarily a good thing. A lot of traders make the excuse of trading off of intuition. No, you shouldn't trade off of intuition. Now, is intuition real? Yes, but we shouldn't trade off of intuition or gut feel. What we need to do, if I stop myself from getting too off track, is accept that intuition, accept that gut feel, but then investigate what is causing us to have that gut feel, right? Because there's something causing us to have that gut feel. Gut feel isn't just like, ooh, like my spidey sense says this is a place to go short, right? None of us are like that. If you are, then you've got an incredible skill. Gut feel or intuition, right? I like that better than gut feel. Intuition is caused by something that we've seen many, many times before, and subconsciously it's lurking in our brain. We just haven't identified what that is. So you may have gut feel because of a supply and demand zone, but you haven't recognized that it's a supply and demand zone. You may have gut feel because of a pin bar where you're like, man, I kind of think the market's going to go short. And then you investigate and you're like, oh, wait, this is a pin bar, a rejection candle, a high test candle. That's what my intuition is stemming from. So our job as traders is to discover what that intuition stems from, create rules for it, test those rules, make sure it's profitable, and then ultimately trade it. But the point is, we operate in that subcategory where it's rules-based discretionary trading, where we need to have very strict rules for what we are doing, what we are taking, what we are looking for. However, there are some areas that are still open to interpretation, like is this an impulse leg, major structure, minor structure, high momentum candles, loss of strength candles, stuff like that. There is kind of that artsy part to it. But anyway, what my trading mentors taught me was something called the CTS system, which was pretty much a way to take all of the technical skills that we were using, whether it's harmonic patterns, AB equals CD patterns, simple patterns, Fibonacci's, right? All the things that we were taking, because it's a lot and it could be overwhelming and confusing, and essentially put it into a checklist. And the checklist did one of two things, right? The first thing, and the more important thing, bigger picture, I would say, because I no longer trade CTS, but I trade CTS, if that makes sense. I no longer trade it, but I follow the process of it. So the bigger picture is that it makes you consistent in what you're looking for. Instead of coming to the chart one day and looking for AB equals CD patterns, and next day looking for double tops, and next day looking for that, you are looking for the exact same things every single day. If you're like me, you do it in the same order. So it makes you very mechanical in your trading. The second thing is it allows you to quantify your trading. So you can base your decisions off of value, right? Yesterday we had the discussion, if you guys remember, about grade A trades and being more aggressive versus grade B trades and being less aggressive. And I think it was, I don't know if it was Steve or Stuart, someone wrote in hey, for a grade A trade, how about we trade full size? But for this grade B trade, how about we trade half size, right? And we had a good conversation about that. The same thing could be done for the CTS, where it's like, hey, if I have a CTS score of 13, right, which is if you use the default scale, I think that's the max, then that's a grade A trade. Therefore, I trade full size. If I have a CTS score of 3, let's say that doesn't meet my minimum. Let's say my minimum requirement is 4. All I have is 3, so I can't take the trade. Well, let's say I'm somewhere in the middle. I have a CTS score of like 6. Okay, that's a tradable opportunity, but it's not a grade A trading opportunity. So maybe I do half size, right? So it allows you to kind of quantify your trading and stay consistent that way, instead of just kind of guessing and being like, well, I think this is a good trading opportunity versus I think this is a grade A trading opportunity, because a lot of the times emotions can get in the way of that. Like if we really want to do something, it will become a grade A trade. If we really don't want to do something, it won't be a grade A trade. And I will tell you this, as someone with 20 years of experience, and I still witness this to this point, I used to get influenced by outside sources like news, right? I called it a negative confirmation bias, where if like I'd have like CNBC and Bloomberg, like all the news channels would be on, because I was lonely and bored as a trader. I didn't have a community, so like no one else knew what trading was. So I just had all these people talk to me, right? And I would get influenced, because if they were all saying stuff, gotta buy silver, I'd be like, hey man, got to buy some silver today, and any silver trade would be a grade A trade. So I would get into trouble. So it kind of stops you from being influenced by that, and vice versa. If you're scared, if you're coming off a losing streak, or sometimes you just have like setups that you don't want to take for whatever reasons, you may classify it as a bad trading opportunity, even though it's a good one. And I still get that to this day, where I will take trades where I'll be like, man, I don't really want to take this. Like I got a bad feeling about this, right? For whatever reason, but I got to do it because it's in the rules, and it ends up winning. I'm like, yeah, glad I did it, right? So it happens all the time. So anyway, this is a great example of that CTS checklist, because we have a few things here, right? We can add up different things that we have, right? Does anyone want to participate before I spoil it? I don't want to spoil it. I don't want to do the work for you. Does anyone want to kind of say the different things that we may have here? We can type it in. I'll give you one. We started already, right? We have the double of top, if I can spell it right. We have the double top. You should know another thing, because we spoke about it all week. I am currently involved in it short right now, so I'm hoping this double top holds, right? What else do we have? RSI what? RSI overbought, right? So RSI overbought. I'll bring that up so you guys can see it a little bit easier. As I bring it up, you should probably notice something else with the RSI. Ooh, this is a fun game. RSI divergence. RSI divergence. Ooh, now Divergent. Good movie series. What else? Anything else? Okay, there we go. Taz says level of structure, right? You guys are forgetting the thing. What am I in? What did we talk about here all week? I even spoiled it this morning. I'm literally in this trade. You know what type of trader I am. Yes, advanced pattern, right? Bat pattern, right? So, and we can add Fibonacci to it as well, right? We take a Fibonacci extension from, I believe this is a Fibonacci, looks like a 127. Fibonacci extension from swing low to swing high right here, and back down 127, right? So we have Fibonacci as well. So it's not just a double top. It is a double top where we have double top, RSI overbought, RSI divergence, structure, bat pattern, fib. If I remember, and forgive me, I don't remember all the scores off the top of my head, but if I remember what are, do we have AB equals CD2? From the AB equals CD pattern 2, yeah. Oh, I forgot about that. That's a 2-pointer. AB equals CD. If I remember our score, that's going to give us 1, 2, 3. I wouldn't call this major structure. In the CTS system, we do major versus minor structure. This would be minor structure. The major structure would be the bigger swing up here. So 1, 2, 3, 4. Advanced pattern is 3, 5, 6, 7, 8, 9, 10. We have a CTS of 10. So again, we're quantifying this setup and saying that, hey, assuming it meets your minimum score, this is something that you value. So cool setup here. we're going to stop looking at it because it's going in our favor right now. But usually when I look at something, I jinx it, and I fear that's going to happen. So I'm going to move this away, right? But video's not done yet, so don't leave. Just want to pop in and say two things real quick before we continue. One, if you're ever interested in joining us in the live trading room, feel free. Head over to www.tier1trading.com. We have a London session. We have a New York session. You can hop in one or the other, hop in both. You can miss them and catch the recordings, however you want to handle it. But it's a very cool opportunity to see what it's like to actively break down and trade the markets each and every day, and a chance for you to spend a few hours a day with some really cool traders who are in the same situation as you are. It also comes with your 14-day risk-free trial membership over on the platform, so there's no type of risk if you don't like it. You get to hang out for 14 days as well as do some other cool stuff with that trial membership. Two, while you're brainstorming what you're going to respond below when I ask you what would you add to your CTS system, don't forget about that. I want to follow up with another part of the same live room recording where we spoke about strategy development and just talk a little bit about adding filters and maybe some different ways you may want to use those filters in your trading. All right, let's hop back in. Actually here, let's look at Euro New Zealand. This was the trend continuation play I liked over the weekend. Yeah, this was, if you guys remember this, I'll take you back in the time machine a little bit, right? We have a pretty clear bullish trend here, right? Would you guys agree? Bottom left to top right, bullish trend, pretty clear bullish trend. So when we go through that 4-step process, IPDE, identify, predict, decide, execute, I want to ask myself the question, is there room for this trend to continue bullishly, or have we hit the ceiling and we're no longer interested in jumping because that would hurt our head? So we look left, and we may need to go back to a higher time frame. Let's go to a weekly. And again, that line is showing me where price action is at. And I'm saying to myself, okay, well, we are at a level of structure, but we're kind of in the middle of it, right? Middle of it. The key level of structure for me is going to be this highest close right here. So this yellow, soon to be blue line is where I predict price action can go to. So now as we go back to our daily, we look at this again. I hit my fast forward button. There was a shortcut for that. Oh, I'm already fast forward. We look at this opportunity and we say, okay, well, price action can go higher, right? Price action can go 210s and above. So this is an opportunity, right? And if we measure out what price action has recently done, I'll just start here, but what have we been doing? We've been extending and pulling back, and extending and pulling back, and extending and ... extending and ... and is where you're supposed to type in stuff. ... pulling back. Yeah, right? So if you are a trend continuation trader, this is the zone where you're looking to take advantage of the market. Now, we have a few things here, right? Obviously, we have a pullback. Our line in the sand is right here. If we violate these lows, pullback is no longer valid, or the trend is no longer valid. We do have what's called hidden diversions, which I'm going to tell you right now. If you are new, pay zero attention to what I'm about to say. And I'm serious. I know I joke and kid a lot, but actually pay zero attention to it because it's going to mess with your mind. But hidden diversions is this. Price action putting in higher lows, but RSI putting in lower lows. Don't worry about what that is. Trust me on that. I'm not joking. You can plenty of time to learn it later. But that is a beneficial sign for a trend continuation opportunity. Now, every trader is different. Let me ask you guys this question. What else might you use if you're looking for a filter? Right? We talked about the CTS earlier and different ways to filter whether it was a good counter trend trading opportunity. We talked about structure. We talked about this. We talked about that. Right? I give you a whole list of things. What else? Like, let's put ourselves in the strategy development labs. And if you haven't checked those out on the channel, or not the channel, on the platform, when you get there, those are really good sessions. Those are pretty much live, like diaries of me going through the strategy development process, and you just seeing like the type of pain that it takes to develop a strategy, but also the process of like trial and error and stuff like that. It's really cool once you get to that point. But what else can we use here, right? We have any moving average people in the building? Anyone like moving averages? Anybody use moving average? I'm not personally a moving average type of guy. Yes for high. Okay. Yeah. What? Well, shoot me some moving. What can I put on? Give me a moving average or two. What would you like me to put on? What would you like me to put on here? 50, 100. You want some fib numbers? 33, 89, 55. Any preferences? So whatever is your moving average preference, it doesn't matter. Okay, let's do it. Devin says 50 and 200 EMAs are popular. They are. Yep. Now, real quick, while we're on the topic of moving average, who can tell me what the best moving average is? What's the best moving average to use? And I'll put in a 55, and I'll add a 200. Who can tell me what the best moving average is? Yeah, there are none. So just before I get the question, I know what you're asking. What's the best moving average? There are none. Like with any indicator, right? The settings of the indicator, there is no best. It's only what's best per you and your strategy. So you have to, I just chose the wrong one. You have to match your moving average to your intentions in the market. Right? You have to do that. That's the only way it will have any relevance. So here's a 200 and what did I say, a 55. So maybe one of your qualifiers is that I only take trend continuation opportunities when price is trading above both the 200, or when the 55 is trading above the 200. In this case, your skinnier one is the 55. Obviously, it's above the 200, so that would be a qualifier. If you want something more tightly drawn on, Noel says, what did you say? You said 8, 20, 50. So let's put in an 8. I'm going to change the color here. Pink, nope, yellow, blue. We'll put in an 8 there. I'm going to take this and make it a 20. And then we're going to add one more and make it a 50. Right? Was that 8, 20, 50? Okay. 8, 20, 50. And one, and again, depends on how you use moving average. Whenever I look at indicators, I like using them either one of three ways: as an entry indicator, an exit indicator. So entry indicator is something that tells me if this happens, then I get in. An entry or an exit indicator is the exact opposite. If this happens, then I get out. And then a filter is more like a directional filter, kind of like we just spoke about, where it's like, if price is above this and this, or if this indicator is above this indicator, then I can get involved in that direction. So again, just looking at different ways to use a moving average. So in this case, and I forgot which was which, we have the moving averages not in order. Let me remember. I forgot what it was already. What was our blue? Blue is small, 8. Yeah, okay. So 8 and then 20, right? So in this case, right, if you're using moving averages as confirmations of trend, that's something that we can debate. It's your personal value on that. But what you would be looking for is in a bullish trend, you would want your smaller moving average above the bigger ones. Does that make sense, guys? So 8, 20, 50 looking like this. So if you're looking for this as a pullback trade, do you have confirmation of those moving averages being in trend? Well, no, you don't, right? Because your 8, your blue here, has crossed under your 50. So maybe a filter that you have, or maybe even an entry reason that you have, is if 8 crosses above 50, then that's your either filter to now you can look for your entry reason to buy, or that could be your buy signal, right? So you can use different tools in many different ways, depending on how you want to do them. So that's a good example of moving averages right there. I'm going to get them off my screen now. They're making me feel yucky. But again, a good example of how you can use moving averages if you want to put that as part of the equation. Another thing we can use too is, Keltner channels, Bollinger Bands. We talked about volatility bands where you can see that price action, right? Maybe you only look for trading opportunities if it's near the extreme, or if it touches or tests or closes below or above the extreme of one of these volatility bands. That's something else you can add, right? There's endless things you can do with strategy development. The point is, by the time you get to this part in your process, right, we identified what the market is doing. Bullish trend, currently pulling back. We predicted, yes, there is room to go higher, right? We can go to 210s and beyond, right? So we predicted a directional bias. This is the decide factor. How do we get involved? And this is where you go to your playbook, right? Your rules, right? So you're not making this stuff up. And you ask yourself, what do I need? Do I need the moving average stuff to happen? Do I need the RSI to go overbought or oversold, excuse me? Do I need a double bottom? Do I need a higher high, higher close, right? What do you need to get involved in the trade? And then once you get that thing, now you can get involved. So this is still a decent opportunity. The market has done absolutely nothing in this level, so I don't see any reason for entry, right? But let's say you're someone that's waiting for a higher high, higher close. You wait for that higher high, higher close. You're setting yourself up for a pretty decent trading opportunity. I don't know where it's going to be. That's the wrong direction. But if you are a trend continuation trader, again, you can have stops below your validation point right here. If you're able to, I'd get them below this one as well. This is a sneaky little play where I can see us kind of spiking here and holding that. So if you can, I'd get them below that one as well. And if you're shooting for that extension, boom. Shoot for it. Go for it, right? Put yourself in a nice trending situation. Cody says, stops rolled the break even on his dollar Canada trade. Oh, I thought you were referencing a clean, dirty diaper. Yeah, I thought that was a new trading reference. Clean, dirty diaper. No, he's literally got to go now and clean a dirty diaper. Yeah, so although Cody is risk-free in his trading opportunity, he is far from risk-free in real life. I am glad I do not have to deal with dirty diapers anymore. Although I for a while, I dealt with a sleepwalking kid who would just literally pull pants down and pee anywhere. That was scary. You just wake up in the morning and squish. I'm like, oh, Jesus. Yeah, it was a weird phase. He would sleepwalk and pee. We'd have to be on. I didn't get a lot of sleep because we'd be on full alert. We hear him get up, and he'd be like in my closet, like with his pants down, thinking it's the toilet. And I'm like, no. And that's why I don't buy expensive clothes, guys. It's not the humility. It's not that I don't want to be flashy. It's because whenever I buy them, my kid pees on them. There you go. Hope you enjoyed the video. If you did, give it that thumbs up, subscribe. That way you don't miss the other stuff that I do. Got another video coming out for you tomorrow. It's going to be a really, really good one, but I don't want to spill the beans on that. And if you're new to the channel, make sure you check out the YouTube Shorts section. Daily, short, quick tips aimed at helping you become a better trader. All right, until next time, plan your trade, trade your plan. Take care.